This is the part where we get to make fun predictions, right? We did this a few years ago.
We're going to go prediction land.
I think we even bet
because
you against me.
Get your crystal ball out. Hey, who won last year though? What's up? Who's winning?
I always win.
You do?
I don't remember.
We have them written down. We do. Where did it go?
I know. I got to go back. I actually do sincerely forget who won because it was such a ridiculous exercise. But it was
had to crush you. There's no way.
You know, we bet on like 5 different major market indices, so maybe it was a tie. I don't know. Or
where was it? Let's go find it. Where did it?
It was pre-COVID, man. So maybe 5-6 years ago.
Oh dear. No, we did it. Didn't we do last year a prediction show? We're like really bad at predictions, by the way.
Yeah,
we need to make sure that people don't take this serious.
No. So this is for fun.
This is to actually make fun of people who predict the markets more so, because to try to predict what's going to happen in a market over 6 to 12 months with thousands of different variables impacting that is kind of a fool's errand, but we do it for fun.
Well, people ask us to do. Today, I had a meeting with the children of a client today, and they actually literally asked me what's going to happen next year. And I'm like, I refuse to answer that question. So now I'm publicly going to do it just for fun.
Okay, that's bad. Hey, listen, producer Brian, can you pull up on that client resource kit I gave you? And this is from our good friends over at First Trust. And when that comes up, we'll talk about it. But here's the deal, right? Like predicting the markets is really tough because there's thousands of variables that affect the markets throughout the year. But I can tell you this, right? I can almost certainly guarantee that there's at least a 70% chance the markets are going to be positive if we look at next year. Because when you look at rolling 1 year periods, it's in the 70s. If we look at rolling, there you go. If you look at rolling 3 year periods, it's higher. This is a chart that's just basically showing you how the stock market fluctuates a lot. Typically, it hasn't much lately. The stock market fluctuates quite a bit, but if you look at 1 year returns, 73% of the time it's been positive. So just imagine that. If you could go to Vegas and have a 73% chance of winning success, that would be epic, right? I'd just move to Vegas.
I'd probably still, it was me.
But isn't that crazy though? You have a 73% chance of making money if you just look at 1 year periods.
Okay.
And to get people to look at 1 year periods is hard. But if you just look at least 1 year periods, when you go to 3 year periods, that goes up substantially. When you go to 5 year periods, it goes up substantially. So
I got the betting. I drew out my diagram here. So we're going to have evidence here. We're going to go plus or minus, and by what percentage number. So don't worry about the actual number of the index or the thing, like just put up 10% or down 10%, up 17, down, whatever.
Yeah, no, we're talking about the MSCI All World Index
or Bitcoin first, just because we started with Bitcoin. What's Bitcoin going to be at the end of next year?
This is going to end up so bad.
Up what or down what? You go first.
We're saying
I'll go first if you want.
2025 total return from January 1 to December 31st.
That's very technical of you. Yes.
Okay. Well, hey,
just to get the bet correct.
I'm making a guess. I'm rubbing my crystal ball. I need to tell it the right information so it spits out.
Yeah.
Bitcoin, here's how I'm going to do it. I'm going to do it where I'm like pretending or I'm really trying to be correct. Bitcoin will be higher than it is today.
By how much?
No, I didn't say. I can't say.
I'm going to say we're going to be up 25%
in Bitcoin.
One. Yep.
I mean, why don't you just spin a roulette? I mean, a kaleidoscope. You're just guessing totally.
Are you scared? You're scared of the bet, huh?
Yes.
Get him, Brian. Come on.
What does producer Brian and Shayna think?
Yeah. What do you think, Shayna?
I'm gonna go Price is Right and say 30%.
Ooh! Now he wins on anything above. That's right.
You can just
I'd go 29.9, or I'd go 30.1.
Is that final answer?
Yeah, 30%.
30.1. Okay. Shayna,
do you want to get on
this action?
Now Brian's trapped between Alex and me, so you only can win if it's right at your number. That was
right at 30.
See, you got to go last, Brian. You got to stall.
Poor guy. Shayna, you want to on this action too?
Yeah, Shayna.
What's your number?
I was going to go 31.
Oh, come on.
That's
Shayna
good.
For 31. I'm writing this down. All right. Next one's S&P 500. We all
U.S.
know
stocks, U.S. large cap stocks.
Yeah. Am I going first again? Because you guys are too scared.
I'll go -5.
Ooh, wow.
Okay.
Why? Because Trump's going to clean out and the Doge team is going to wipe out so many government jobs that there's going to be higher unemployment, and that's going to take a while to filter through the market.
I'm going to go plus 11.
Okay. Producer team, do you guys want to partner up on it?
I'm voting for Jason.
Oh, what? -5.
I'll go 5%.
There you go.
5?
Yeah.
All right, cool. This is kind of fun. Dow Jones.
Hey, we should throw up another slide real quick. Hold on. I'm going to tell you which one.
What slide could possibly go with this?
No, listen, it does. I got one. It's actually the same one.
Oh, okay.
Look at the same one that you had up. And when you go through the individual years on this, just looking at the up years, like 70, we got 21% is the average positive return, and a -13 is the average downside return. That's since 1926. What's amazing is the market averaged 10%, right? If you look at the S&P 500, US large cap stocks. Since 1926 through the end of 2023, it averaged 10.3%. But yet very, very rarely did it land anywhere between 8 and 12%. So people think that, man, the market's really good. They all want to go chase it and get in because the average of the positive years is up 21. And then when the negative years come, it's the average of the negative is down 13. I mean, that's a far off of the average return of 10, right?
Yeah.
So
unpredictable.
It's so unpredictable in the short term and so radically predictable in the long term. It's crazy.